the stock market morning prep video for Friday, May the 9th. Well, the markets put in another reversal. Doesn't look like it. Numbers weren't so bad if you looked at it, but if you were watching the charts intraday, we had another nasty reversal. And comments from here in this morning session here was Janet Yellen pump of the markets. And it's just so silly, guys, honestly, why the markets would rally on Janet Yellen's comments. That has nothing to do, nothing has changed with her policy structure. Nothing at all. We have to pay attention to this and why the markets are rallying. If there was something of meaning, possibly, maybe I would say, okay, but to have this rally up like this is just absolutely ludicrous. And this is why I say you have to understand the dynamics of the markets right now when you're trading. And on top of that, you have to realize there's a lot of divergence going on, and the markets are, I think, in trouble here in the short term. So you look at the numbers here: Dow Jones up 32, Nasdaq down 16, S&P up, down 2.5, and the Russell down 11. I think the Dow Jones actually put in another all-time high. And we get this nasty reversal. So we have the laggard still leading, which is the Dow Jones and the S&P, and then we have the Russell and the tech-heavy Nasdaq Qs really taking it on the chin here, really selling off hard. So they are the leaders, and we'll see which is going to win this competition here. We also have bonds and the yen rally again yesterday. Gold didn't do much yet, but I want you to keep an eye on gold. I think gold's going to be a play here. It could go either way, so I want to watch this a little bit more for a few more trading sessions, and then we can possibly get involved in the gold trade, and even crude oil for that matter. Okay, but this is a nasty reversal. This is not a healthy market here. You go back and you just, look at this. This is just absolutely chop. This is nasty chop here, guys. It's not what you want to be trading in here. Gap lower, run back up, and this the other day on Monday was almost craziness, and then here we had this move lower again on Tuesday. So you gotta use a word of caution. And again, I keep saying, when in doubt, stay out. Definitely stay out of these markets if you're not accustomed to trading them, because you will get chopped up in this marketplace here. You could see this here. But again, when we have another intraday sell-off, and I think this is like number 8 in the last several weeks. Markets generally don't reverse here unless you have a really, geopolitical event happening intraday, or somebody really with clout speaks. This is Janet Yellen speaking yesterday, and her comments were the same. Nothing has changed in markets, and sure enough, they realized it, and the markets dumped yesterday. So a lot of people got hurt here. But if you're patient enough, and you could see if this market was actually going to roll over, you would really realize and get your signals. Like we do at Trading Market Technicals here, you could have literally profited from this downside move here. Okay, so let's go to some of these charts here. Again, I'm going to stick to the indices because everything is a little screwed up. The indicators are all pointing lower, but I just want to stick to what we're looking at here. Again, bonds, inverted head and shoulders. I know it gets a little monotonous, but I need to show you what's happening. We have a little flag pennant. We broke out of the flag yesterday, came back in, and now we're looking to see if we're going to pop out of this flag again. But remember, the longer-term picture, I think bonds are basically still in a downtrend. But there's a lot of room to counter-trend rally bonds, which would definitely put pressure on stocks. Now, we did have a big reversal yesterday in the dollar. So that's why I also said, remember, this is not going to be easy. This is a very big trend line support here, 79. And, the powers of B, are going to defend this dollar area here. So it's going to take a little time, and I think that's why probably a lot of the commodities didn't really budge yet. So we'll just see. Keep an eye on that. But what's disturbing also is the yen. The yen is not moving anywhere. It had a solid performance yesterday and getting close to a breakout point, and then it's going to need to take out this cluster in the 200 on top of it. But once that goes, guys, you got to be very careful. I do think that the yen will have a good, bigger move higher. Now, in the longer term, I think the yen reverts back to the downside. But this is what we're dealing with. So right now, in the extreme short term, we're going to just kind of deal with what we're looking at here. Now, here's the hourly in the ES. You can see just nasty, just crazy price action. Reversal here on Friday. The job numbers, we came down. We broke out the 1272 extension, failed again. We rallied. We actually sold off pretty hard here, down to 1854. We came back up again. and now we're back below the 1272 extension. So this is ugly price action, ugly price action. And what's happening is, if you watch it intraday, what happens is you get a good move up in the morning, stocks move, but when they revert and they sell off, and then they bounce back up again, like if you had something like here, and we sold off and then we recovered, stocks are not recovering. That's the problem. The index is recovered, so you have a move lower and then a move higher. But when the indexes recover, stocks don't. They recover maybe 20-30% of the sell-off that happened intraday. So what are you dealt with? Now you can't make your money back that you were waiting for, but you didn't get stopped out, and then you're basically done for the day. So it's not a good trading environment at the moment, but it will be. It's starting to pick up now. Diamonds here, strongest of the five. Don't ask me why. Brick and mortar, Dow 30. It looks like to me, if anything, they're looking at the diamonds, the Dow Jones, the brick and mortar, more like a safe haven area to put some money, a little more speculative versus utilities and the REITs and stuff like that. So that I think could be happening. But we made all intraday highs in the diamonds as well. So Dow Jones holding up the rest of the market. Now the transports didn't do too bad, but if you dialed into the transports, the stocks, they didn't do too good. So we have a lot of divergence here. This is not good. Now this is not a pretty chart here. This is very ugly. We had that pop back up to the 200 on the EMA and the SMA, and we just reverted right back down to the downside, guys. Ugly, ugly chart here. Ugly. And this telling me risk off. This is a risk off environment here. Although some of the other asset classes aren't telling us, and some of the indices aren't, but this is definitely a risk off environment. And then one more I'm going to show you is the Qs. We recovered again of late, and then we just rolled right back down again. We actually closed, I think, down 8 cents or something like that, but ugly. I mean, this is an ugly looking chart. And remember, I showed you yesterday, we have a big head and shoulders pattern. Neckline is right around here at 84. We're going to need to break that to really validate that. But this is an ugly looking chart, guys. So for the novice trader out there, use extreme caution. Maybe take a step back until we really get confirmation that the market as a whole is going to indeed start to move lower again. Right now, we only have a couple of asset classes telling us, and leaders no less, that we are moving lower. But in the meantime, pick your best trade. Wait for the possibility where it's really easy, where you see it easy. Don't chase, and then the markets will reward you, okay? Just letting you know that we'll be back on Monday. Happy Mother's Day to everyone out there. Mother's Day is on Sunday, and believe it or not, I just checked the Traders Almanac. 71% of the time on following Monday of Mother's Day is positive. So, FYI, we'll see what happens on Monday. Have a great weekend, everybody. Enjoy Mother's Day.